Bitcoin soars past $124,000. Is $150,000 within reach? Bitcoin is on a tear. But how long can it last? On August 14th, Bitcoin BTC surged to a record-breaking high above $124,000. The world's most popular cryptocurrency has gained nearly 30% this year and seems poised for even more growth, thanks to improving sentiment in the crypto market. But can Bitcoin really climb to $150,000? To answer that, we need to look at what's driving this rally, the forces behind Bitcoin's rise. Several catalysts are propelling Bitcoin higher right now. One is the recent executive order from the White House, which paves the way for crypto to be included in 401k plans. This is expected to unlock trillions in new capital, a significant portion of which will likely flow into Bitcoin. Another key factor is institutional adoption. It seems like everyone is buying Bitcoin these days. Corporations, Bitcoin treasury companies, and even the U.S. government is hinting at finding a budget-neutral way to buy Bitcoin. At the same time, money keeps pouring into spot Bitcoin ETFs, arguably the best gauge of institutional demand. Positive inflows into these ETFs suggest Bitcoin is likely to continue its upward trajectory. But if inflows dry up, Bitcoin could be in for a bumpy ride. Finally, there's the overall macroeconomic situation. The market seems to be coming to grips with tariffs and their potential impact on the U.S. economy. For now, inflationary pressures don't seem as threatening as they did back in April, and investors are expecting a series of interest rate cuts starting in September. Historically, lower rates have favored crypto, leading to more money flowing into risky, volatile assets like Bitcoin. So everything is aligning in Bitcoin's favor. Institutional adoption, improving market sentiment, and expectations of rate cuts are fueling the market and pushing Bitcoin higher. What do prediction markets say? That said, Bitcoin hitting $150,000 this year is far from guaranteed. One way to gauge the market's sentiment is by looking at data from prediction markets, where people trade contracts based on where they think Bitcoin's price is headed. On the Kalshi prediction market, for example, traders believe there's a 75% chance of Bitcoin hitting $130,000 this year, a 53% chance of reaching $140,000, and a 37% chance of hitting $150,000. In other words, there's a 1 in 3 chance Bitcoin will reach $150,000 by year's end. The odds get slimmer from there. There's only a 27% chance Bitcoin will hit $160,000 and a 10% chance it will reach $200,000. This last point is noteworthy because at the start of the year, nearly everyone predicted Bitcoin would double in value and easily hit $200,000. What to watch next? The market is pricing in an interest rate cut, but that can happen if inflation flares up again. And that's exactly what happened almost as soon as Bitcoin hit $124,000. New economic data suggested inflationary pressures were building, causing Bitcoin to quickly slide back to $120,000. With that in mind, Bitcoin investors should closely monitor any economic data the Federal Reserve might consider when deciding how to adjust interest rates in September. This marks a shift from how people invested in Bitcoin in the past, where money flowed into Bitcoin regardless of the Fed's perceived actions. Just a few years ago, Bitcoin was completely uncorrelated with any major asset class, meaning it could move independently of other assets. But we're starting to see a correlation with stocks, especially tech stocks. As institutional investors flock to Bitcoin, the world's most popular cryptocurrency is starting to behave more like a risky, high-upside tech stock. Long-term, I remain bullish on Bitcoin. But as we saw in April, when Bitcoin buckled under the threat of tariffs, it remains a highly volatile digital asset subject to the broader macroeconomic outlook. There's a reasonably good chance Bitcoin will hit $150,000, but only if the broader economy doesn't deteriorate.